Welcome back! Today, we are looking at the ultimate battle of the financial titans, Visa versus Mastercard. We ran a fascinating backtest. What if, instead of buying a $6.45 Starbucks latte every single day for the past 18 years, you invested that exact amount into these payment giants? The results you are looking at on screen are absolutely staggering. Let's break down the numbers. Over this 18-year period, both companies completely crushed the S&P 500. If you put that daily coffee money into the broader market, the white line on our chart, you'd have a very respectable $125,000. But if you chose Visa, you'd be sitting on over $205,000, representing a massive 597% return. But the undisputed champion here is Mastercard. The pink line shows Mastercard delivering an incredible 773% return, turning your daily coffee habit into over $256,000. Even after surviving the brutal 30% drop during the March 2020 crash, both stocks surged right back, proving the sheer power of their compounding growth. So, why did they perform so well, and why did Mastercard edge out Visa? First, you have to understand their incredible business model. Visa and Mastercard don't actually lend money. They are the toll booths of the global economy. Every time a card is swiped, they take a tiny fraction of a cent. Over the last 2 decades, as the world rapidly shifted from cash to digital payments, their revenues exploded with almost zero additional cost. As for why Mastercard beat Visa, while Visa is the larger company by overall payment volume, Mastercard has historically grown just a bit faster. They've been incredibly aggressive in expanding internationally, especially in Europe and emerging markets, and they successfully pivoted heavily into high-margin value-added services like cybersecurity and data analytics. Looking ahead, the payment sector is evolving. The easy growth from the cash-to-card transition in developed nations is mostly behind us. The future growth lies in B2B payments, cross-border transactions, and dominating emerging markets. However, the sector does face real headwinds. They are constantly battling alternative payment methods like buy now, pay later, digital wallets, and blockchain tech. Plus, government regulations and merchant pushback against swipe fees will always be a lingering risk. As for Visa and Mastercard themselves, their economic moats remain incredibly deep. It is practically impossible for a new competitor to replicate their global network of banks, consumers, and merchants. Visa remains the heavyweight, stable, immensely profitable, and a safe bet for massive volume. Mastercard remains the slightly faster, more agile player, positioned beautifully for tech-driven growth. In the end, whether you chose the green card or the orange and red circles, you won big. Which of these compounders are you holding in your portfolio? Let me know in the comments, and don't forget to like and subscribe for more data-driven market insights.